Hello and welcome to 3 Things You Need to Know This Week, our regular series designed to help you sift through the noise across financial media and understand what really matters for markets. To stay up to date with our latest market insights, subscribe to our YouTube channel or visit fisherinvestments.com. And with that, here are 3 things you need to know this week. First, monetary policy. This week, both the U.S. Federal Reserve and Bank of England will hold policy meetings, although we suspect all attention will be on the Fed. Kevin Warsh officially became the chairman of the Fed. He faces the first big test when the Federal Open Market Committee, known as the FOMC, meets on June 16th and 17th. The FOMC is a group of 12 individuals, including former Fed Chair Jerome Powell, that sets U.S. monetary policy collectively. Both central banks will be meeting as consumer prices have risen in the U.S. in recent months due to the ongoing conflict in Iran. In the UK, prices have stayed more stable, but fears of resurgent inflation remain high. Recall that the UK experienced some of the highest rates of inflation in the developed world in 2022 and 2023. Despite inflation fears, many continue to hope rate cuts are still on the table this year, although neither bank is expected to announce changes this month. This week's meeting will give us a glimpse at where global monetary policy may be headed for the remainder of the year. Regardless of the outcome, which may simply be to hold rates where they are, we don't believe stocks need rate cuts or hikes to keep rising. The greater risk to markets is if central banks inadvertently make a monetary policy error, like hiking rates too fast or inverting the yield curve. Next, economic sentiment in Europe. On Tuesday, we'll get a fresh look at economic sentiment data for the Eurozone. The onset of the war in Iran knocked Eurozone sentiment with negative readings in March, April, and May. However, May's reading beat expectations and showed signs of an improved outlook, though we wouldn't be surprised to find June's reading to be less than glowing. Of course, feelings and reality are 2 different things, and it's not unusual to see a disconnect between what people feel, especially in times of uncertainty, and how the economy or markets perform. That's because markets thrive on the gap between expectations and reality. When investors see things as bad and think they'll get worse, there's greater potential to exceed expectations. That's a bullish signal for global stocks, which have recently hit new all-time highs. So when low sentiment grabs headlines, remember that a negative outlook often signals opportunity for stocks to surprise to the upside. Finally, global trade. This week, we'll get updated trade data from the Eurozone and Japan. Despite tariff fears, net new global trade outside the U.S. has been growing steadily since the start of 2025. We believe this is an underappreciated positive few are aware of. While disagreements over tariffs have dominated headlines over the last year and a half, there has also been increased cooperation between other economies around the world. We've seen the European Union sign major deals with India and Latin America, while countries like China and Canada have agreed to slash tariffs on electric vehicle imports. Other major economies like the UK, Japan, and Australia have new deals in place as well, as relationships evolve in response to war, US tariffs, and other factors. With more deals on the horizon through 2026, we don't expect this trend to stop anytime soon. While these developments haven't gotten too much media attention, we think it's a meaningful and underappreciated positive for global stocks. As the trade story outside the US quietly improves, while war and division dominate headlines, it supports market growth and can help fuel positive surprise. And that's it for this episode of 3 Things You Need to Know This Week. For more of our thoughts on markets, check out This Week in Review, released every Friday. You can also visit fisherinvestments.com. Thanks for tuning in, and don't forget to hit like and subscribe.